Let's get into those employment numbers today. And the unemployment rate was forecast to come in at 4%, down from 4.1% in January. Instead, it's way lower, 3.7%, as more than 116,000 jobs, most of them full-time, as you can see, were created in February. The long-term chart shows that unemployment is lurching lower, back towards its 50-year low of 3.4% from the middle of last year. The new jobs boom is right across Australia, but most notable, perhaps, are South Australia and Western Australia, and both of those are the nation's strongest housing markets over the past year. The Reserve Bank forecasts unemployment at 4.2% by this June and 4.3% by December. Governor Michelle Bullock only yesterday suggested unemployment should trend higher before rates here go lower. That's important.
I don't want to put a figure on the unemployment rate that we would like to sort of see. I think the unemployment rate is something that is mechanically going to rise as the economy slows.
So let's bring in here Warren Hogan, independent economist and a consultant for the small business lender Judo Bank. Warren, you heard from the governor there saying, I don't want to be prescriptive about this, but we expect it to trend higher. It's doing exactly the opposite. How does the Reserve Bank behave?
Well, they're not going to like these numbers. I mean, look, it's great to have job creation and low unemployment, but we've got an inflation problem, so it's really not great timing. It confirms there's strong labour demand in the economy, there's labour shortages, there's heaps of spots that need to be filled, and of course this strong population growth is feeding that demand and it's creating jobs, and we saw a lot of full-time jobs. So this number was really strong. It's going to make the RBA very nervous, and it makes them look very wise in not ruling anything in or out, because this narrative that the next move in rates is down is no done deal.
OK, so does that mean that the next move in interest rates could be up and not down? You've talked about this before, but does this number today put a rate rise back on the table?
It certainly does. I don't think the market will start talking about it like that, but for me this is a data point about how the economy is performing early in 2024. It goes along with a few other data points, whether it's the earnings season results, whether it's the Judo Bank PMI that came out this morning for March, showing business conditions improving for the fourth month in a row. It's all going the one way. And of course, the RBA needs the economy to remain soft.
Yeah, so we can see that PMI here. So 4 months in a row, that's risen. Business conditions improving. But the second part about this also is, if we go further forward, I think you got more here. You can see employment prospects also improving as well during that time.
Yeah, I mean, we've seen a turnaround in full-time employment. Now, the issue with, there you go, there's the full-time employment trending down, but starting to turn. And really strong part-time. That's the immigration. That's the part-time work coming in through the students and the backpackers. What we're seeing is the economy, the labour market numbers giving us a clean read for the first time in 2 months.
OK, can I ask another question? And the real issue is, if we have a tight employment market, which 3.7% unemployment does suggest, then there's more pressure on wages. That's where the inflation comes from, isn't it? There's not only demand from spending in the economy from all those people employed, but what there also is that there's pressure on wages to rise, and that's where baked-in inflation in our economy comes from.
It certainly is, and the RBA should be worried about this because our labour market is heavily regulated. It took a long time for it to start to react to the high inflation of the pandemic. It is now reacting. And the problem for the RBA is, if we start to see wage setting get up towards 4.5, 5, it's going to be hard to turn that around with all these 2 and 3 year enterprise bargains and so forth. So what we are going to be watching very closely is wages, because they themselves have said it has peaked. Now, if that's right, fine.